Welcome to FX Options University, recorded live at the International Securities Exchange, the world's largest equity options exchange. Join the industry's top trading professionals as they provide insight and strategies for trading in the currency markets using FX options. FX options are a low-risk alternative to hedging currency moves in any market condition.
But then I look here below that at theta, and I see that I have negative theta, which means that as each day passes, I lose a little bit as each day passes. And that's basically, you can kind of look at that as what I'm paying for that benefit of having positive gamma. And I look at the vega, and again, it's always helpful when I'm looking at spreads to sort of net out all the Greeks, including vega. But again, with calendar spreads, netting out the vega, while it's sort of important, I have to kind of take a little bit of a step back and know that the vegas, that the implied volatilities could move independently for each month. So that netted out vega figure here of negative 0.041, or about 4 cents, that doesn't tell the whole story, because there could be a volatility convergence or divergence. That is to say, November and December volatilities could converge, that is, get closer together, which is what I wouldn't want. Or they could diverge, and they could get further apart, which would be okay. Specifically, what I would really like to see is that since I'm buying the November call and I'm selling the December call, I would like to see the November rise and the December fall. But I'll take one of those. I'll take the November rising, the December sitting where it is, or I'll take the December falling and November sitting where it is. So, time spreads do get kind of complicated sometimes, because there's a lot more going on with them than there are with other spreads, because you can have these volatility convergences or divergences, that add another element of risk or potential profit. So to really trade these and to be really good and to profit in the long run, you've got to be really good at reading volatility charts and figuring that out, and be really good at term structure. And, while if you've never done this before, it seems kind of intimidating to newbies, it's not really so bad when you study it. So let's kind of recap just a little bit here, and then we still have enough time for me to take a few questions. So really, we can sum this up in a nice tight little package, or specifically two tight little packages, by looking at this in terms of realized volatility risk or implied volatility risk. And the realized volatility risk is the sort of gamma theta trade-off. When I buy calendars, I get negative gamma, that hurts me, but I have positive theta, that helps me. Moral to the story is, I don't want to see a big move when I buy a calendar. Just the opposite when I'm short a calendar. Volatility plays, I kind of have to look at this a little multidimensionally. Although when I buy a calendar, I get positive vega, and when I sell one, I get negative vega. I kind of have the thing that I have going on with any type of spread. Okay, if volatility as a whole moves up or moves down, I can profit or lose based on my vega and based on the direction of the movement. But I also have this additional element going on of the potential convergence and divergence of implied volatility among the months. All right, so go ahead and send in some questions here. I'm happy to answer them, and if we happen to run out of time or anything, I have some contact information I'm going to show on the next slide, and you can feel free to send me an email, and I'd be happy to answer any questions. And on the next slide, where my contact information is, there's a link to my website, which has some information on my mentoring program. If anyone's interested in learning more about that, you can contact me through my website. So, okay, let's see here. Here's
Dan,
the
I have a question.
Yes.
A question, Dan. How much
Okay.
was that spread? The initial the CDD. What was the debit on the calendar? The 106 calendar. I forgot. You remember what that was?
I don't offhand, but I can go back and find out for sure.
Sure. Oh, here's the interesting thing, Dan. I just checked the closing prices.
Yeah.
You know where it's trading? Dan did this presentation how many days ago? About maybe 10?
Yeah, about.
Something like that?
Yeah.
This calendar it closed at around 80 cents today. And the interesting thing, Dan, is that you actually call this spot on. If you buy the 106 calendar, just to refresh, as Dan said, you want CDD not to move that much. It actually moved all the way down to 102, and then it closed around 105 today. So common sense would tell you, well, maybe it's worth a little bit less since it's down to 105 versus 106. Yeah, I know theta's working for you, so that helps you a little bit. But it closed at 106, I think, primarily because what Dan said, that volatility went up in the last 6 or 7 trading days. And Dan was actually saying this is a nuance that you, all of us, need to learn more about. And hopefully if you can get that clue in the markets, you're going to be much better off than other traders if you have the nuance of a little bit. And we're not always going to be certain about where volatility is going to go, but if you have a little bit of an edge on volatility, that could go a long way. Correct, Dan?
Yeah, I mean, that is like the single most important thing that I talk to all my students about is, I mean, trading's getting edge. I mean, if there's trader A and trader B and one looks at volatility and they're able to do, 5 cents better on every single trade on average than the other trader, man, they're going to be so much more profitable by the end of the year.
Great point.
Yeah, all these little things help. So, I mean, you always have to use volatility in every trade to get that edge.
Hey, Dan, how, all the attendees, how can they learn more? If you go back to your other, at the end, do you have a trial? Do you have like a phone call that you would sort of figure out if you're the right fit for them and they're the right fit for you as far as your mentoring program?
Yeah. I mean, I talk to a lot of people, and basically what I can do for anybody watching this webinar is I can give them a free assessment. So if you go to my website and you contact me through there and you just mention this ISE webinar and mention that you were an attendee at it, I'll give you a free assessment, and we can kind of see if if you would be a good candidate to be a market taker mentoring student. I like my students to know a little bit about options going in and a little bit about being able to analyze some underlying. And it doesn't matter if it's currencies or stocks or futures or whatever. So yeah. So just go ahead and send me an email or visit me through my website, and I'm happy to give you a free assessment.
What was that? Market maker. Okay.
Yeah, and there's the website is markettaker.com.
Market taker. I'll type that in.
And you can follow me on Twitter as well, by the way.
Oh, good. Let's see if we can take some questions. I saw Andrew had a good one. Andrew's question was multi-month calendars. Do you use them with FX options? I mean, obviously, as you said, you could use them with anything, but how do you select a month? Is it back to looking at volatility, Dan?
Yeah, it is. There's certainly an art to analyzing volatility, and I laid out all the basics here, but to really get good at it takes a little bit. You can do, if you want to kind of get fancy and do a multi-month calendar, you can trade something called a butterfly, but a butterfly in terms of the months instead of in terms of the strikes. Whereas I might buy 1 November, sell 2 December, and buy 1 January. Mm-hmm. And, the question is, well, why would I do that? Well, for exactly the reasons we were talking about. If the December is more expensive than the November and the January, well, those volatilities could be out of whack, and I could stand to profit if I sell the expensive one and I buy the cheaper ones.
That makes sense. Makes sense.
Thank you for participating in this week's session. Visit www.fxoptions.com. ISE FX options can be easily traded through all options-enabled brokerage accounts.